This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. I have one piece of housekeeping to attend to before we talk again about oil stocks, and that's that the Value Investor Podcast has been added to its own page on iTunes. So you can still get the Value Investor Podcast along with the Market Edge podcast on iTunes if you're already subscribing over there. But if you haven't subscribed at all, you can now subscribe just to the Value Investor Podcast if that's the only one you want to listen to, also on iTunes. So look for it over there on its own page. Okay, now on to the topic for this week, which again, I said is the oil stocks. I know we just talked about this. I covered this a couple weeks ago, and we debated whether or not they were cheap or value traps. And I encourage everyone to remember that to keep in mind the rising earnings estimates. That's kind of key for whether or not, they're cheap or they have value. But since we talked about them, the oil stocks have plunged lower. I know it's getting even a little more juicy there. So I've been watching them closely. I know many of you have too. But another thing I've noticed about the oil companies that's a little different from our last discussion is that the insiders have been buying in some of these. Now, remember, the insiders are those people who are in upper management, like the CEO, the CFO. You can get the chief legal counsel. You might get some vice presidents, the head of HR, the head of marketing, and then you get usually directors, people who are on the board of directors. And those people must file a form disclosing their purchases and sales of company stock. They have to file it with the SEC within 48 hours of the transaction, so we can find out what they're all doing and buying and selling. Now, I just look at the buys because that's the most important thing to me, because that's when they're using their own money to get in there and buy more shares that they already have a lot of shares of usually. A lot of these insiders across management get awards as compensation for their job. And then the directors definitely almost always get awards too. So they already have a ton of shares, and it's intriguing to me about why they're buying more. Now, remember, they can't just buy and sell whenever they want. That's kind of the myth that's out there. When some of these stocks hit new lows, people get all crazy, like, why aren't the insiders buying here at the lows? Well, they're only allowed to buy at certain times, usually by their compliance department. The lawyers tell them when they can buy, of course. And that's when they don't have information that's unknown to other shareholders. So normally what you get is a company will report earnings, and then the compliance tells all the insiders, you can buy now, because they have the conference call, they talk with the analysts during it, the information is out there about what they did and sales and everything. So that's usually the time when it really opens, the window for them to be buying. And then it stays open for a little while, depending on the size of the company, what they're doing. If they're doing a lot of M&A or other things, then it might not stay open for very long. And usually in the smaller companies, you get a wider window just because it's smaller. There isn't as much going on, and they don't have as strict rules on when you can buy and sell. So again, remember, just because it's hitting new lows, if it's the week or 2 weeks or even sometimes 5 weeks before the earnings report comes out, they're going to be on lockdown, I kind of call it. They're not going to be able to buy. So keeping that in mind, we still can find out a lot about what's going on in a company when these insiders buy. And the insiders can be a good indicator of value, actually. They tend to buy in two different kinds of scenarios, and one of them is the value scenario. So let me cover what that is. The first scenario is when their stock is at or near new highs. And that's when things are going so well at the company that even with that stock at new highs, the insiders just want to buy more. They're excited. Things are going well. They see, a continuation of things going well into the future. They want more stock than they already have. So that usually isn't the value scenario because they're buying at the highs. There's a lot of big growth. That's basically the growth scenario. The second scenario is what we're interested in, and that's when the stock has sold off and the insiders believe there's a real deal there. So they think it's cheap. They think it's crazy. It's gone as low as it has. And then they jump in to buy more shares on the cheap. So I've never seen insiders buy when the stock has just been kind of treading water. I'm sure it happens every once in a while, but it's just kind of human nature for anybody, insiders or you and I as normal investors, to want to buy when things are going really good. So think of, NVIDIA or Ulta or Google and Facebook and those stocks, the FANGs. We want more because it's going up and we're making money and we feel good. Or we want to buy when it goes on the cheap. So many of us as value investors, that's our real time to buy, is when it goes, plunges down, everybody's abandoning it, they're throwing it out, they're selling, nobody cares about what's happening with those stocks. That's when we also feel excited to buy, at least some of us do. And it does have like kind of a greed component to it because we feel like we can make money when it plunges down that low because the selling is overdone, and so do the insiders. Despite getting a lot of shares as compensation, they still want to make money too. So they see these opportunities. And like I said, the insiders have been buying some of these oil companies kind of aggressively in 2017. So I decided to take a look because I was seeing some of these buys and I wanted to know which ones are they buying in, and it's kind of telling to me the ones that they are buying in versus the ones they're not. And as you know, the oil stocks, they're very weak this year. They're hitting, some of them, 52-week lows, but they're not quite yet at those 2016 lows that a lot of the oil companies hit in the real dark days last year in January and February when crude, was plunging and everybody thought it would go to $10, and it didn't, but everyone thought that. So they were selling off all those energy shares. So these stocks aren't quite that low yet. So that makes it interesting too to see who's going in if they're not at the mega lows, as I like to call last year's lows. So I already covered a lot of these, the cheap versus value aspect of it on the other podcast. So I'm not going to cover any of that again. I'm just going to cover who's buying and where. So I took a look, firstly, this time at some of the big cap companies, because I know a lot of you are interested in those and you might own some of those. And it's interesting what I found there. So Exxon, ticker XOM, I didn't find any insider buys in 2016 or 2017, surprisingly. The last insider buy there was in August of 2015, but that was when Exxon shares actually hit the lows, was in August 2015. They did not hit new lows in the 2016 period. So there was one insider buying in 2015. That's not super crazy bullishness to me, but there was one at the low there. Similarly with Chevron, no one has bought in 2017, so nobody this year. And it looks like there was one in 2016, although it was kind of a weird transaction. I won't get into why that is, but that was kind of strange. So someone did buy in August 2016, but really similar to Exxon, their shares also hit the lows in August 2015. And there was an executive vice president who bought then for a family trust in August 2015. Again, not crazy buying, considering these were all hitting these lows. But none of these have really sold off, these two, as much as some of the small caps. Exxon's only down 8% so far year to date. Chevron down 9.6%. So clearly here, the insiders are not being greedy. The stock's not down. It's not cheap enough. There's no reason for them to get more. They all get awards at both of these companies and a lot of awards. So no reason for them to be buying. I also looked at ConocoPhillips and EOG Resources. Conoco's ticker COP, EOG Resources is EOG. Let's start with EOG. So there's been no buying, none at all, in 2015, 2016, or 2017. The lows for EOG were in January 2016. January, February were around the lows. Shares were at $60 then. They're now at $88. So again, nobody at EOG thought it was cheap enough before, and nobody's been buying in there. The shares are down 12% so far year to date. ConocoPhillips, nobody's bought in 2017 there either. The last buys were all in August of 2016, interestingly, but that was not the lows. The lows were in February 2016, but there were 3 buys in August. So that is more intriguing to me that there was some getting in there. And that was a vice president and 2 directors buying in August of 2016. Shares are down only 11% so far year to date. So again, nobody at that one is really thinking, these are a deal. So nobody diving in there. So it looks like a lot of the big caps, not as much activity. But at one of the larger caps, Occidental, which has a ticker OXY, those shares are down 14.3%. And they've been hitting kind of not too far from the lows of January 2016, actually. Occidental didn't get beaten down quite as badly in 2016 as some of the others. So shares are actually pretty weak considering here. And there have been 2 insiders going in there to buy. There was a CFO who bought in June 2017, that just joined the company, gets awards, but bought another 1,700 shares and got a huge award when they joined of 42,000 shares. So that's showing some interesting assumptions there based on that it was trading near that 52-week low when he bought. And then the CEO also bought just in March, and that was 15,000 shares actually, which is a pretty good chunk. And she's been there since 2014 and has never before bought on the open market and does get awards as well. So that one is a little more significant to me. It was a little bit more of a signal showing some support of the company at that level. And I always like to see when the CEO is buying because they are, well compensated and get a lot of awards. So the fact that this is a pretty big buy at 15,000 shares here is kind of sending a signal. So Occidental, pretty intriguing to me here with a couple buys here in 2017, given that nobody's buying in a lot of these other companies. Nobody's gone in 2017. So I also looked at Pioneer Drilling, another larger cap. That ticker is PXD. I talked about it last time on the podcast. Those shares are down 14%. As well, year to date. The last insider buy was only in 2015. In September of 2015, the CFO bought some shares for a family trust, but there were no other buys in 2016 or 2017. August 2015, like with Exxon and Chevron, was the lows. And then they kind of tested those again in January and February of 2016 when everything was selling off. So interesting, again, nobody's really diving into Pioneer Drilling. So read into it what you will if nobody's buying. And then I looked at Apache. We talked about them last time. They're down 25%, so a little bit weaker here than some of these other larger caps. And there has been some buying. There's been one buy so far in 2017 by a director. They bought in May. They just joined the board, so they haven't gotten any awards yet. And they bought 10,000 shares, which is a pretty big chunk there. So that director is kind of sending a signal of like, I believe here. The shares bottomed out in January and February of 2016, around $33. They're now at $45. So despite the 25% drop, they're not quite at those lows yet. There were some directors buying last year in 2016. In November, a couple directors bought then when the shares were around 57, 58. But now, again, we're near around 45, 46. So looking a little juicy here for Apache. There was a lot of insider buying in August 2015. Like the other ones, it hit a low then. So there was quite a few. There was a CFO, a couple vice presidents. That's when the shares were in the upper 30s or low 40s. So they were getting pretty nice little deal there. They felt like the shares were cheap and they were buying. In full disclosure, I do own Apache in my own personal portfolio. So let's move to some of the small guys now, because I know I talked about them last time. Everybody's interested in what's going on there. And there's a lot more insider buying at some of them, but not all. So I looked at Whiting, ticker WLL. I do own this one in my personal portfolio too. It's down 54% now. So pretty brutal, but no insiders are buying this year and none bought in 2016. And when you get those lows, it is kind of stunning that nobody's greedy enough to go in there. I was rethinking this as I was writing this up, and I said, Tracy, why are you buying this? Like, none of the insiders are buying. What do they know? They must know more than me. So I don't know. I'm like rethinking my holding in this one now because nobody's diving in, even though the shares are, again, down significantly. So something to keep in mind. Whiting, WLL is that ticker. Now, two other ones that have seen much more active buying and also recent active buying are these small cap guys. SM Energy, ticker SM. There was a buy by the president and CEO on June 8th. He last bought in February, so they're buying multiple times. And then his last buy before that was in February of 2016 when it did hit those lows. So the lows were around $8 in February 2016. He bought again. He bought right around those lows at around $9. He bought 6,000 shares then. And then he's buying, the June 8th buy was at 16, and they've slid further since then. So they're down 54, almost 55% year to date. So the president CEO pretty actively buying there. And then the executive vice president of operations is also bought. And then he bought in February and March of this year as well. And then he also bought in February and March of 2016 when it was like around $8.50, $8.50. So both of these guys buying aggressively at the last lows and then have been basically dollar cost averaging recently as the shares have declined. So I find that really interesting. They also have a lot of shares that get awards. So this is putting their own money in, and they're doing it kind of aggressively here. So I'm definitely watching SM Energy. The other one where they're buying is SRC Energy. Their chief operating officer for development also bought on June 8th, same day as the CEO of SM Energy bought his shares. This insider bought 8,000 shares on that date. He also bought in July of last year and then in September of last year. So has been buying around the same level, around $6.40 or so, and it got in again at around $6.45. These shares are down 18.3% year to date. And some of you might remember that SRC Energy used to trade as Synergy last year, and then they changed their name and their ticker. So if you look at that chart, you'd be like, well, they haven't been around real long, but they have been. And if you look at the SEC filings, you'll see the other buys in for Synergy shares. It takes a little while for the SEC to get all the data into the new ticker, but I noticed the data is now in there. So you can see that everybody was buying Synergy prior, which is the same company. It's now SRC Energy. So definitely check out some of these where the insiders are buying again and buying kind of aggressively. Nobody else has really been buying at SRC Energy, but I'm going to keep an eye on it. Now, remember, some of them will be in the lockdown period now. We're getting a little closer to the next earnings report, and it varies by company. Some will put a lockdown on, 5 or 6 weeks before the earnings report. Some a little bit closer, but anytime you get within like a month or so of that earnings report, they're going to be on lockdown. So even if the shares continue to plunge here or get weaker, they might not be able to get in. So don't take that as a sign of like, no one is buying in there. Wait for the earnings to come out and then see who buys right after it if the shares are still weak, because that will kind of give you a good indication. The window will open right after the earnings report, usually for most companies, and then they'll have another opportunity to get in there. So let me just recap kind of what's going on. So we do have insiders buying at SM Energy. That ticker is SM. At SRC Energy, which is SRCI, they're buying at, let me get my notes here, Apache, APA, and at Occidental, OXY. And then they were not buying at Exxon, XOM, Chevron, CVX, Whiting, WLL, Pioneer, PXD. I think that covers everybody. There's a couple other smaller names that I'm sure I haven't talked about. Continental Resources, I forgot about them. Ticker CLR. Their chairman and CEO, who owns 10% of the company, Harold Hamm, he's been buying pretty aggressively. He bought in 2017, and he bought some for his family trust. He owns a gazillion shares. As I said, he's a 10% plus owner, and there's been no other insider buyings in there, though, except for him since 2015 that I've seen. So shares are down there 40%. So you might want to check out that one too, but it's just the CEO over there, and he owns a ton already. So this, again, shows some interesting patterns, and you might want to rethink where you're looking at energy based on kind of what the insiders are doing, because they do know their companies and they do get greedy when things sell off. So I like to look at insider buying when a sector is as weak as energy is, because it does give me a clue on what might be going on over there. So be sure to tune in to the last podcast where I go over the cheap versus value for a lot of these companies. That'll give you kind of a good background on some of them, because I discussed the earnings estimates over there and what's happening with the actual earnings with these companies. And this is a good supplement to that, to show what's going on behind the scenes and which insiders actually believe in their company and are getting greedy here. So be sure to check all that out. And both will be on iTunes, of course, and you can also subscribe on SoundCloud. So subscribe over there to make sure you get all of these podcasts. And I'll be back again next week with more value stocks.